NVIDIA stock is trading at 192.21 USD, reflecting a slight intraday dip of 0.30 or 0.16% as the morning session progresses on this Friday, January 30th, 2026. While the broader market shows mixed signals, the minor retreat in NVIDIA stock today hides a much more complex tug-of-war happening behind the scenes. Most traders looking at their Robinhood app or checking their Fidelity mobile app see a trillion-dollar giant taking a breather after a massive multi-year run, but the underlying institutional activity suggests something else entirely. While retail sentiment on investing sites might seem cautious due to the high valuation, the heavy hitters are moving in. We are seeing a massive shift where the expectation of a cyclical peak in artificial intelligence is being met with the reality of an accelerating hardware replacement cycle that most didn't see coming until this very month. The common belief right now is that the easy gains in the chip sector are gone. You hear it at every coffee shop and see it on every individual brokerage dashboard. People think that because every major tech firm already bought their initial batch of H100s and Blackwell chips, the demand has to level off. However, the reality is that we are entering a phase of physical AI and specialized inference that requires an entirely different scale of compute. Just this week, reports surfaced that NVIDIA stock is at the center of a massive $60 billion investment discussion involving OpenAI alongside other tech titans. This isn't just about building better chatbots, it's about the physical infrastructure needed for autonomous systems and real-time reasoning. When you look at your SoFi Invest account or manage your Interactive Brokers account, you might see the price flickering, but what you aren't seeing is the massive backlog of orders for the upcoming Vera Rubin architecture. Institutional investors are currently holding about 65% of NVIDIA stock, and far from selling off, they've been increasing their positions at a rate of 10-to-1 in some cases during the first few weeks of 2026. They're looking past the daily noise you find on most investing sites and focusing on the fact that the company is effectively resetting the entire data center standard. If you are using Schwab Intelligent Portfolios or similar automated tools, your exposure to this move is likely being managed for you, but for those of us doing self-investing or active online investing, the technical levels are what matter right now. The stock is holding firm above its 100-day moving average, which is a sign of extreme strength given the macroeconomic pressures of early 2026. We are seeing a high-conviction buy bias from over 50 Wall Street analysts, with some price targets reaching as high as $350. Let's talk about the recent price action because it tells a story of hidden strength. Even with today's fractional decline, the stock is showing a medium-term upward bias. On your Fidelity trading platform or when checking your Interactive Brokers trading charts, you will notice a cluster of moving averages providing a solid floor. The reality of the situation is that the market is currently underestimating the impact of the H200 chip sales in China. For a long time, the narrative was that export controls would cripple the company's growth in that region, but with recent easing and the approval of the H200 for certain applications, a massive revenue stream that was thought to be lost is now flowing back in. We are talking about potential orders for millions of units. If you were using a Robinhood stock trading strategy, you might be tempted to trade the small swings, but the institutional side is playing for the long-term shift in global compute power. I want to hear from you on this. Comment below how many shares of NVIDIA stock you currently hold in your portfolio. Are you a long-term believer or are you looking for an exit point? The business model of this company has transformed from a simple hardware provider into a full-scale software and infrastructure platform. Their CUDA platform has created a moat that is almost impossible to cross. When people talk about Apple stock or Tesla stock, they're talking about consumer-facing ecosystems, but NVIDIA stock represents the ecosystem that allows those companies to function. Their recent partnership with Mercedes-Benz to develop robo-taxi services is a prime example. This isn't just about chips, it's about the entire software stack that handles autonomous perception. If you are using Fidelity Wealth Management or seeking professional investment help, they will tell you that the value lies in this integration. It is why many long-term holders prefer to keep their shares in their Fidelity IRAs or through their Interactive Brokers account rather than trading the volatility. The financial performance we saw in the last report was nothing short of staggering. Revenue hit $57 billion, which was a 62% increase year over year. Most companies of this size are happy with 5 or 10% growth. The data center segment alone accounted for over $51 billion of that. This is where the gap between expectation and reality becomes widest. The market expected a slowdown, but instead we got record-breaking efficiency metrics from the Blackwell systems. For those managing their own individual brokerage accounts or exploring SoFi active investing, these fundamentals are the bedrock of the bull case. The company is even returning billions to shareholders through buybacks, which provides an extra layer of support for the share price. If you were looking at online investment options, you have likely noticed that everyone is trying to find the next big winner, but the reality is that the leader is often the one with the most momentum. While others are looking at Fidelity mutual funds or various Fidelity ETFs to get broad exposure, direct ownership of the top performers has been the winning strategy for the past 3 years. This brings us to the future outlook and the catalysts that will drive the next phase of growth. We have the Vera Rubin platform launching in the second half of 2026. This architecture is designed specifically for high-speed inference and reasoning, which is where the industry is moving. The expectation is that we will see another massive upgrade cycle as data centers move to 800-volt infrastructures to support these new chips. The risks, of course, are always there. Geopolitical tensions and the possibility of further export restrictions are the main things that keep investors up at night. If you are using a SoFi robo-advisor or intelligent portfolio, these risks are diversified away to some extent, but for the direct investor using a Robinhood app or Fidelity brokerage, you have to be comfortable with the volatility that comes with being at the forefront of a global shift. The company's valuation is high by traditional standards, trading at over 40 times its 2026 earnings estimate. However, if they hit their revenue targets of over $350 billion for the next fiscal year, that valuation starts to look a lot more reasonable. Looking at the broader landscape of online investing, the competition from firms like AMD and Intel is real, but they are still playing catch-up. The sheer scale of the company's production through TSMC and their advanced packaging capabilities give them a lead that is measured in years, not months. This is why when you look at your Robinhood investments or your SoFi stocks, the tech sector still revolves around this one name. The narrative that AI is a bubble is being challenged by the reality of real-world applications in finance, healthcare, and automotive sectors. They're even making moves into the 6G network space, partnering with telecom giants to build AI-native infrastructures. As we wrap up this look at the current state of the market, the contrast between the expectation of a slowdown and the reality of expanding use cases is the defining factor for the stock. We started today at 192.21 USD, a small drop that serves as a reminder that even the strongest names need to consolidate. But the depth of the institutional support and the massive roadmap ahead suggests that the story is far from over. Whether you are using the Robinhood cash management features, buying Robinhood fractional shares, or managing a complex portfolio on the Interactive Brokers platform, staying informed on these micro shifts is how you stay ahead. The company has successfully managed to stay at the top of the heap by consistently outperforming even the most optimistic analyst targets. As we look toward the rest of 2026, the focus will remain on the execution of the new chip launches and the stability of the supply chain. For those using Fidelity investments or checking their Interactive Brokers fees to optimize their trading, the takeaway is clear. The underlying demand for high-performance compute is not just staying steady, it's evolving. In summary, the market expected the AI hype to fade, but the reality is that the infrastructure build-out is only getting more sophisticated. The slight dip in the live price today is just a small ripple in a much larger tide. We have seen record revenue, massive institutional accumulation, and a future roadmap that looks to solidify the company's position as the backbone of the next generation of technology. Keep an eye on those technical levels on your SoFi trading platform and stay focused on the long-term catalysts. The gap between what people think is possible and what is actually happening in the data centers of the world is where the true value is being created. Make sure you are following the data, not just the headlines you see on common investing sites. Use the tools available to you, whether that is the Fidelity trading platform, the Robinhood app, or the advanced features of interactive brokers, to keep a close watch on the volume and institutional flows. The next few months will be telling as the first Rubin chips move toward production. This is a high-stakes environment where the reality of technical leadership continues to crush the expectation of a market ceiling. Stay grounded in the numbers, watch the institutional moves, and as always, keep your eye on the tape.